Hi there, Serial Trader here. Alright, so I've just recently gotten back from Hawaii and it was fantastic, by the way. Very enjoyable. Checking in with Bitcoin here to get things started. So I got stopped out at 7,000. That was not the bottom. Uh, so, alright, you don't always have successful trades, and that's why you use stops. But now that I'm looking at this and back from vacation, so I've bought back in the 6,500 range. My average price, somewhere in the 6,550s at this point. And again, once again, a full position. So not that I'm a advocate or a fan of doing this, but this whole time, been trying to catch this bottom. Yes, there's been some losses as far as US dollars go, but as far as actually increasing the quantity of Bitcoin itself, because I've been getting stopped out and then buying back in at a lower USD price per Bitcoin, I'm actually still able to increase the number of Bitcoins I have, which is some consolation, obviously. Now, my overall goal here with trading Bitcoin is not to just simply increase the amount of Bitcoin I have, but it really is to increase the amount of USD I have because, well, at least until some point in the future, if this ever happens, USD is still what's going to buy you most of the things you want or need and do all that. So now there's certainly hope that Bitcoin can disrupt that, and that's one of the fundamental stories behind it, but let's not discuss that for now. So, getting down to the analysis, this ABC expanded flat scenario, that's out the window now. This C wave has now just gone too far, too deep. It just doesn't even look correct at this point. It doesn't have the right look for an expanded flat. It's just out of proportion with the proposed A and B here. So let's just get rid of that altogether. Now, this has a lot of complexity, and there's a number of ways to count it. And at this point, there's not much utility in trying to do that. But I'll show you where I do see, now obviously I've re-entered this trade for a reason, and I'll get to that in a second. So let's just go to that daily chart. I think daily should be good. And let's just clean this right up, because I think that we need to lean on the triangle interpretation at this point. That's really the only thing I can rest on without having to turn to a more bearish interpretation here, which I will do if 6,000 breaks, by the way. Oh, another thing, so I've entered at 65 in the 65s. My stop is at 59, so that's $100 below 6,000, just to allow any kind of short-term spikes to just slightly break that level, a false break of support. I think a $100 buffer there is reasonable to allow for that should it happen. It could go down to 59.80 or 59.90 something, just to psychologically break that 6,000, flush loss stops out that are put there, and then you could see that big break to the upside after that flush out stop running move. So $100 buffer zone just to avoid a stop running move should one occur. Now, I just want to mention that, okay, first of all, since we are on such a scale here on the daily chart, I am going to go to log, and let me do that here. Log scale, okay. This brings things more into proportion, percentage-wise. And I'll just point out, okay, so, well, let me get some Elliott wave labels up first. Okay, so we have our significant peak there at 19,000, almost 20,000. And now I believe we have our A down, our B up, C down, D up, and now we've already either put in the E wave or very close to doing so, if this count should hold up to the market's price action. So definitely working a contracting triangle interpretation here. And so we didn't actually take out the C wave extreme. We got really close though on Bitfinex here. So 64.25 0.1 was the actual C wave bottom, and so far this proposed E wave went as low as 64.36.1. So that is a difference of just mere dollars on a multi-$1,000 instrument. So very, very close. Now, remember, if I've mentioned before, in a contracting triangle, you can sometimes have that flush, that stop running move that takes out the C wave extreme ever so briefly on your E wave, and then reverses sharply higher. But even under that kind of stop running move, you should not have that A wave termination point tested. But just in case, I really want to, because this is possibly a great opportunity here if this holds. I really want to give it that leeway, so I put the stop at 5,900, okay, just to allow for a brief spike below, a false break of support possibly at 6,000, should it occur. I'm not saying it's going to, but it's possible. Okay, so that being said, if we really get a proper break of 6,000, then we could be going, significantly lower, a couple $1,000s lower. You possibly see the $4,000, even the $3,000 levels kind of tested there. Now, I still currently don't think that that's the more probable outcome, but it is certainly possible, and that's why the stop is going to be at 59. And just remember, this whole time, this has been, well, okay, when did this correction start? So we're looking at the all-time high here on Bitfinex was the December 17th, 2017. So now we're into June of 2018. So we're, a good 6 months into this correction, okay? So trying to call the major pivot of what so far has been a 6 month on this log scale, kind of sideways correction. That's a very difficult thing to do. It's not easy, and there will be lots of times where, like in this most recent case, you get stopped out for a small loss, or I should say a managed loss. I mean, small loss is really a matter of perspective, but a few $100 loss as opposed to a multi-$1,000 loss, it's relatively small. Now, obviously, we're doing that with the anticipation of a potential multi-$1,000 gain, so we're still risking hundreds to try and make thousands. And in that sense, it's still a worthwhile thing to be trying to do. But really, this is the line in the sand. If we lose our 6,000 level decisively and start trending down, I will abandon any kind of immediate bullish expectations, and I'll be now. There's not really a good way for me to be shorting this, given my current accounts that I have and everything. So at that point, I'd just be stepping aside and waiting for some sort of really convincing low ball, entry opportunity, if that happens. And remember, I think I pointed this out before, but this could all just be, initial leg down, and then this could be a triangle B or X, and then we could have that final move down in what could be a larger zigzag or combination or something like that. But again, I'm going to stick to this for now, because for now we're still holding these key levels, and really the most significant, that 6,000 level, it's really a must hold, short of a slight dip and then a spike up afterwards. I'll accept a stop running move, but I won't accept as where I put my stop $100 move below it. So we'll see how that plays out. But well, just I'll put it this way: this is a potentially high reward, relatively low risk play, but the probability, I mean, whenever we're this close to breaking key support levels, you have to realize that the probability of getting stopped out is definitely there. But the opportunity, if these levels do hold, and this overall triangle completes, and we actually start a new uptrend, which we've been looking for and waiting for months. I mean, that'll make up for all, well, actually there wasn't even that many of these, but that'll make up for a few, small losses of hundreds here and hundreds there getting stopped out trying to catch this. more than make up for that. And actually, there were still some successful small bounce trades made. So really, I'm still not doing too bad with Bitcoin here. But these last two attempts definitely failed to try and catch a major pivot. And this is kind of the last stand here for the bulls. But I guess I'll probably leave it there for now. I'm kind of tired, jet lagged, if you will. And hopefully everyone's trading has been going well. All right, Serial Trader signing off.